Ted, good morning. Faust, good morning. Mark, good morning. How are you guys doing? All right. If you guys can hear me, cherry blossoms. There's screen share. Tradespoon. Yeah, then we can start. Welcome to Tradespoon in Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. Good morning, Claude. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk and not suitable for everyone. If you are new to trading stock or options, I encourage you to visit the link on your screen, optionsclearing.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor, I'm not registered as STIVEN or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, let's see. Not here. Okay. All right. The trading plan is important, right? We talked about always documenting your trades in a journal. I encourage you to document your trades and have a pre-trading checklist that consists of your rules from trading plan. Some of my rules from trading plan are cash. I propose to have 30% of your portfolio in cash and portfolio drawdown. Especially if you're new to trading stock or options, I would encourage you to consider 4 positions at a time, no more than 4 positions at a time, maximum exposure 2.5%. And always be aware of trading setups where you either look for high probability of success trades with a smaller return on capital or high return on capital trades with smaller probability of success. For stock trading, this is usually, you look at chart patterns, certain chart patterns where you know that head and shoulders, or when RSI is oversold, overbought, you have 60–70% probability that this trade is going to go in your direction, right? For option trading, usually it has to do with do you want to be long volatility and buy volatility, buying calls or debit option trades, or do you want to sell premium, iron condors or credit put spread, credit call spreads, where you're collecting the premium. All right, so how do you determine 4 positions and 2.5% account value? Well, 4 positions straightforward. 2.5% could be difficult, right? Because our relationship with gains and losses is different, right? It's different between people, right? When you on a $10,000 account, if you're confronted with $250 loss or $250 gain, we treat them differently. $250 gain, usually we just book our profits, and if it's $250 loss, especially if you're new to trading, you usually wait and see if the trade goes in your direction, and if it's not, then you can be exposed to $500. So this is when you would grade your trade C or D, right? If your trade was down $500, then based whether it's successful trade or unsuccessful, eventually you would grade C and D. In terms of support and resistance and finding 2.5% stop loss, I would encourage you to look at the stock forecast toolbox. So we just had retail data. I think it came in a little bit better than expected, unchanged. Month-over-month expectation was negative. So going into a lot of conversations are about, I think briefly, the 30-year yield was higher than the 2-year yield. So steepening of the yield curve, which is good for financial stocks, I think in the past, since the past 2 years, 2-year yield has been higher than the 30-year yield. So you have kind of a flattening of the yield curve, inverted yield curve, and now I think for a brief second, 30-year was higher than 2-year. 10-year continues to drop, right? We've seen this key support at 418, new lows. I would watch that level after retail data. And then FXY, right, Japanese yen, was a stimulus from the government, is trading higher. Keith will join us shortly. Perfect. So in terms of support and resistance, right, looking at the yield, looking at the US dollar, so model sees 561, we're at 562. For day trading, I would maybe step aside a little bit further. 556 would be the support. So if you're doing day trading, I would use 1% stop loss, right, as your support. I mean, obviously, I agree with the model. First level of defense is 561, right? This is the yesterday's, I think it was yesterday's low. So yesterday's low is your support number 1. That's what the model sees. But that's only 0.5% lower. I would use maybe 1% if you're doing day trading. Right? So if you're doing day trading, you need to have $10,000, $25,000 in your account, and usually you risk less than 1%. So that's $250. If you hold in position overnight, we talked about 550 in terms of position is where the first level of defense is for shorter term, I mean medium term trading. Right, so 550, that would be close to 3%. So here you're using 1% stop loss, 5 points. If you're doing day trading, and if longer, I would use 15 points, which is about 3% stop loss. In both instances, you just divide it by 250. 250 divided by 5 is 50 shares. So if you do day trading, maybe 50 shares. And if you're using 550, 15 points, then you would use 15 shares, right? 15 times 15. So this is how I would decide on the 2.5% versus to decide on portfolio drawdown, right? 2.5%. And of 10,000, average account at Tradespoon yellow tunnel is $250, and that's how we determine the stop loss. So those are very important. We'll continue to make new all-time highs almost every day. Basically, in terms of the news, broadening of the rally, right? Participation of small caps and mid caps on better than inflation. Expected inflation data was the expectation that we are in soft landing, right? We're in soft landing. And interest rates, I think last time I checked was like 80% that Fed will cut rates in September. Some people think they can actually rather cut it in July, but I think probability is low of that event. But September probability is high. And day 1, day 2, day 3 were above this breakout of 212. So definitely you see strong rotation where the small caps, even pre-market today, let's see, up 1%, right? So small caps continues to grind higher, up another 1%. And I'm long small caps. Yesterday we put on a trade using option spread. So let's look at option spread. 2 trades we did yesterday. Let's see, sharing questions. Claude, good morning. Small cap continuation. Thank you. Railroads finally catching nice big. I like them from here. Raymond, good morning. So yesterday we did 2 trades. One was the small caps. So I'm long small caps and the Bank of America iron conduit. So we're in the middle of the earnings season. Not in the middle. I mean, first kind of started last Thursday, Friday. We're just starting. Today we have UNH is up 4%. So we talked about UNH can go up 5% up, 5% down. So UNH after the earnings is up. Schwab is down. Steep pullback in Schwab, down 7%. Morgan Stanley is down 1.5%. And then Bank of America is up 1%. And we talked about Iron Condor selling premium because of the positioning. Let's see, do I have? Let's look at the positionings. Basically, put skew. So you had a big put skew with the emphasis on. Let's look at the predicted move bar chart. Expected move. Bank of America. So expected was $2, right? The expected move for Bank of America is $2, and it has moved so far 50 cents, right? So selling premium. So let's try to put in order to close this trade. The Iron Condor. Cherry Blossom Russell, how are you? All right, so give me 1 second to put on this trade or status. So Bank of America is up, and let's try to close the call spread for 2 cents. Debit of 2 cents, 3 cents, for 3 cents. I mean, we have till Friday, but I want to free up my buying power, so I'm going to put an order to close Bank of America. Any questions so far? Keith, can you hear me?
Dan, good morning.
Good morning. How are you?
Good. How are you guys doing?
Good, good. Any thoughts on earnings season? We have Bank of America. We did Iron Condor yesterday. We talked about UNH, Schwab. What are your thoughts on the start of the earnings season?
Yeah, I think Bank of America kind of did sort of the bullish side of the expectation here, obviously. A little bit bullish, but, generally underperforming the expected move, moving pretty in line with the average size move here on the upside. So I think it did basically what was wanted out of the Iron Condor trade. So that worked out well. Obviously, Schwab and UNH a bit bigger moves here. UNH with the potential for this breakout here. So I guess that the market was right to have been buying up into earnings this time. So, I like to give it a couple of a little bit of time here after the open when you've got an earnings announcement like UNH where there's a potential for a breakout. Sometimes we see that fade after the open. So we'll see how that goes this morning. It looks like we're trading off the highs. So maybe there's profit taking. Maybe this is the sell the news kind of event for UNH. And then, of course, Schwab with the disappointing number. So let's kind of see if this behaves a little bit like Wells Fargo, where we get a recovery. I think if I remember correctly, in July, the There was some decent open interest on the 70 puts, a little over 7,000 contracts there. So that could act as a bit of a magnet here for the morning and, through the rest of the week. On the upside, the 80, 82.5 calls were kind of where the open interest was. But since we're trading into the downside here, so those 70 puts just act like a potential magnet here. But much like what we saw in Wells Fargo, that could create sort of a bounce back point. So we'll see kind of how that goes here over the course of the morning as well.
Very good. Thank you. Thank you.
Yeah.
And IWM, let's see.
Keep waiting for that to slow down. It just doesn't seem to want to.
IWM.
Yeah.
No, I think the breakout, usually my rule is 2 to 3 days, right? If I see 2 to 3 days that we have a breakout or change in trend, right?
Yeah.
Small caps were underperforming, they were downtrend. So the question is, has the trend been changing? 2 to 3 days, usually, unless there's some kind of a bad retail data or, rise in inflation, I think, it's a pattern of higher highs and higher lows. And you see interest rate sensitive stocks like small caps are trading higher. So iron counter, I'm going to try to close Bank of America for 3 cents, right? So we talked about I was able to collect 21 cents, 0.5%. And again, if you do small caps, if you did Bank of America, Morgan Stanley is also, if you did Morgan Stanley, we talked about last night before the close, down only 1.5%. So this is all about deciding whether you want to be long or short the volatility. In both cases, there was a high demand, put skew, where there was high open interest in these names where dealers are long gamma. And usually when dealers are long gamma, then you don't have, more than 2 standard deviation move. If the dealers are short gamma, it could act as a repellent where it could, especially on these AI stocks, that the stock could continue going higher. So any questions on the elite circle? Let me disconnect it. Let me share the screen. Screen share. Discord. Any questions on Discord? So you should be able to see the screen now. Oh, Mark Cherry Blossom, everybody's here. Okay, so that's Bank of America trade. I'm long IWM yesterday, the spread. It continues to grind higher. And I did trim Applied Materials, right? The trade that we put on in the morning reached the target gain, and I'm out of half of the position of Applied Material. I'm out. Today, I did look into the model. Both you can see an active trader and aggressive power trader. And what caught my attention is, again, I would call it, elections trade, energy, right? After the attempted assassination of Trump, probability of Republicans taking control during the election has increased substantially. And you can see a large move in ExxonMobil, Schlumberger, and green energy sold off. Kind of typical blue versus red trade. I do see ExxonMobil had a strong move. Today it's down slightly, and Schlumberger. So those are some of the trade ideas. If you think Republicans will have the control, then healthcare, energy, green energy are some of the potentially stocks where you can see potential breakout. I don't have any energy names, so ExxonMobil could be one of the trades, especially as I think Halliburton announces earnings this week. Keith, what are your thoughts on energy at this point?
Yeah, I think the biggest question is for me on energy is looking at USO getting the break today and the oil prices. Is that going to provide some sort of a weight on the oil names? But obviously OAH's move yesterday was exceptional, a really good start to a potential shift there. So I tend to think that there is some potential here for some bullish behavior. The ones that I kind of always like looking at for some leverage or would that like to trend as well are like ConocoPhillips, COP. It's been pretty range bound here near the lows. So if we can get back above that 115, 116 range, the highs here from the end of June, early July, that could be an interesting entry point there, a couple bucks away on that. Similar sort of setup for Occidental OXY, looking to get above about 64, which would also put it above the 100-day moving average. So sets up Occidental for some bullish behavior. But again, those kind of require a 3-4% kind of rally before I'm looking to enter into them. So for now, it's more of a watch list of names for me, where I'm looking at a few different oil names, looking for those entry signs.
Thank you. Any questions so far? It looks like Bank of America is actually continues to rally. So let's see. 1 second, I'm looking at my positions. The Bank of America continues to rally, and the short call is continues to grind higher. So need to be careful. Yeah. So 70 cents, about another 2%. All right. So let's see. Yeah. So Bank of America is up almost 3.5%, 43.39, and I do have 44 calls. So we're getting close to that level. Let's see if there's any overhead resistance. So it looks like Bank of America continues to grind higher. Let's see. There's really maybe 44, this neckline back in 21 highs, but it looks like it's on the way to retest all-time highs back to 2022 and close all the gap. So strong price action, Bank of America, Morgan Stanley down 1%, UNH up 3%, Schwab is down 7%. Let's see, small caps are up 1.5%. As we said, banks are flat. The regional banks are up 2%. All right, so interest-sensitive sectors like small caps and regional banks, which are a big part of small caps, are up. And Spiders is up 35 basis points, continues to grind higher. So let's look. So I do have to keep an eye on Bank of America right now. When I can close the trade and maybe break even, because the short 44 call is 20 cents. I do have a spread, or I can see if rally continues. So it's the same thing. Usually I get into 5-minute intervals. Let's see, Bank of America 5-minute interval, and see if there is a pullback, right? Because usually the rallies, it reaches some kind of overhead resistance and it consolidates, either before the next move down or move higher. And again, with the yield steepening, right, the 2-year briefly touched above 10-year, one of the beneficiaries are banks, right? One of the beneficiaries are banks. So you have to kind of keep an eye on Bank of America and the support. Meanwhile, let's look at the other positions. Let's see if we want to review them. Positions. Let's see. Okay. So Applied Materials still long AMAT, half of the position. Let's look at AMAT. We do have Taiwan Semiconductors announcing earnings. Same kind of idea as UNH, right? It could rally, it could pull back. So at this point, if you still want to have small exposure to semiconductors, then you would keep the trade Otherwise, you can close it. I would say right now the stop loss is, if it drops below 240, then potentially you might want to get out of the trade. Talked about Bank of America. I have to keep an eye. Dow Jones, right? This is the short higher after the earnings. Dow Jones is also higher, above 400 level. Day 1, day 2, day 3. It could be a confirmed breakout, right? So then I would consider exiting Dow Jones if you're down more than 0.5%. I mean, more than 50% on your spread. Keith, what are your thoughts on usually when you get out of your spread position? Do you take 50% loss? Do you get out maximum loss?
Yeah, so I mean, I guess it depends upon the trade when I'm originally putting it on. Every time I put on a trade, I just assume from the get-go that in the worst case I can lose 100%. But obviously, I don't want to get to 100% on any case. But I make sure that I'm comfortable with the reality that it's possible. If I'm doing something like what you've got here in Dow Jones, where it's intended as a hedge for the overall market. It's a little bit different because, you actually kind of hope to lose money on that trade because it means that the rest of your portfolio is doing well. But at the same point, at some point, it's worth closing, especially if you're taking profits on winners. So I tend to think of that when it's a hedge as something that I'm willing to lose 100% because it means I'm making money elsewhere. But if I'm reducing other long positions, then the necessity for the hedge dissipates. So, yeah, it's a little, I guess, a little questionable for me. It really just depends upon how I'm setting it up. So, let's say, for example, I've got $10,000 of net exposure on the long side, and I want to hedge 20% of my exposure. If I reduce my $10,000 down to $5,000, then I don't need that hedge anymore as much. But in the case of like a long call spread like this, the delta decreases, a short call spread like this, the delta is decreasing as you rally. So the exposure actually is lessening automatically because of the long gamma of the short call spread here above $400. So, yeah, I guess, long story short, I tend to kind of let the hedges run against me and say that's my payment to the gods, the trading gods.
Thank you. No, I appreciate. Yeah, I appreciate the opportunity, the thought process. So there, yeah, sometimes I would run these spreads to maximum loss. Sometimes, especially if it's August and there's only a couple of weeks left, and we're already in the money. That are waiting for $5, maximum, spread price. I decided to close at 4 because I am down 50% of the spread of the credit that I received. So at this point, I closed Dow Jones, and we'll see if there is a reversal. But, I can put on this trade again, right? If Dow Jones drops below 400, I can re-enter this trade, which is fine. But as long as it's above 400, the time is working against me. Even if we have sideways consolidation, if it stays above 400, then every day I'm losing premium, right? Because I'm short, then I'm in the money spread. So I did close Dow Jones hedge for $4, and I changed Bank of America to 15 cents because Bank of America continues to, continues to grind. Well, it looks like it's pausing, consolidating right now. So this could be an opportunity to just break even or take a small gain. We'll see where Bank of America ends up. But the bias is to the upside, especially on banks, right? Especially on banks right now. So we just have to be careful and just potentially take the either small loss or small gain, because we do have till Friday, and a lot of things can happen between now and Friday, right? Especially 2% move in banks could happen pretty quickly. So you just have to be careful. Discord, you should be able to see my screen now. And then let's look at the questions. Railroads are catching a bit. A magnificent sound going to bounce like NVIDIA and Tesla. Let's look at NVIDIA and Tesla. NVIDIA has been consolidating, right? You definitely do have rotation into small caps and mid caps, but technology is not I would say best description is consolidating. And we've had that price action back in March and April, where between the next earnings season, NVIDIA didn't go anywhere. So it could be the same setup that until end of August, NVIDIA announces earnings, right, in 43 days. So end of August, it just trades sideways. What do you think, Keith? NVIDIA and Tesla?
Yeah, it just doesn't seem like anybody's getting too excited about semiconductors right now. So much more focused on the small caps. So even if NVIDIA gets a bid, it might be another week or two before it becomes more of an exciting sector, just since it seems like that, yeah, that's not the sector people particularly care about today. So yeah, I think, from a technical perspective, getting back into the highs from last week would be really a key point for me to say that this is bullish instead of just chopping.
Okay, yeah, and agree. In terms of Tesla earnings, I think next 7 days. So next Tuesday.
Tesla earnings coming up is that's. I think with Tesla, I mentioned yesterday, I think I'm waiting until after earnings. Tesla, I always struggle with anyway, so it's like I know that that's one of those stocks that for some reason I just never seem to get it right. So I tend to be very timid with Tesla trades.
That makes sense. Yeah. My rule: don't short strong stocks. So shorting Tesla probably doesn't make sense. Buying on the dips seems like over a long term can work. CLF down at the open due to acquisition, a couple $1 billion in steel. Thank you, Kevin. What is your opinion on the bank earnings? Is that their stock price room to grow? I think my opinion on banks, especially, was yield steepening and soft landing, and if the Fed is going to cut rates, and as long as it's a soft landing narrative, and that's kind of the default narrative right now, I think banks can continue going higher. And you can see when initial reaction to JP Morgan and Wells Fargo has been negative, but at this point, JP Morgan again making new all-time highs. So JP Morgan, Bank of America, regional banks, small caps, I think it's better enough higher highs, higher lows. I mean, it's never a one-way trade. So we are approaching August. So I think we will have some kind of consolidation. But I think going into the end of the year, it's a pattern of higher highs, higher lows. From seasonality point, the only negative I can see that can derail the rally, because the market is overbought, right? Doesn't matter what technical indicators you are looking for, but usually, we pick towards the end of July, and then August there is a pullback like last year. So it could be the same thing where even though banks are leading and small caps are leading the market right now, they could pull back. Keith, what are your thoughts on JP Morgan and banks going forward?
Yeah, I like JP Morgan. I think that there's a long-term trend here that seems to be intact still. The earnings looked a little bit bearish, but we completely bounced back, made a new high. So for me, JP Morgan bull trend still intact. And yeah, I think you mentioned, there are a number of individual banks that look pretty good still right now. Goldman Sachs looks really good after earnings, making new highs again today. Wells Fargo, as you mentioned, that's bounced back most of the loss of from the move on earnings, so that's in pretty good shape. And then the regional banks that are coming up this week could be interesting. You look at I wouldn't necessarily say regional bank, but like U.S. Bancorp, USB, that's coming up quite a bit here. Regions Financial making new highs, RF. Synchrony, which I know you had a position before, making new highs now. All these regional banks seem to be getting excited about their earnings. So it's going to be interesting to see how those come out here tomorrow with a couple of these regional banks that have had these big rallies, to see if that slows down this move or if it just creates an extension of an overbought condition.
Thank you. No, I agree. But right now you do see regional financial breaking out, Synchrony Financial going higher. I think PNC had earnings today, if I'm not mistaken. In 3 days. My apologies. It did have. PNC had earnings today. And small caps and regional banks continue their march forward. All right. Let's see. How's Wells Bank of America? Good. consolidating. It's not pulling back. So and that's usually a sign of strength. So we need to try to close the trade. The sooner the better. Bank of America. Let's see. PNC continues grinding higher, and Bank of America. Yeah, Bank of America is also at session high. So we still have a strong move to the upside in these names. Any questions? All right, let's see. Elite Circle, let's go. Keep going. Talked about Bank of America, small caps, AMAT, LA Lilly. Okay, so I did close NDO position, rotate in LA Lilly. I think, you know, I'm a buyer on pullbacks on these weight loss healthcare drugs. Let's look at one day. So it continues much higher, you know, I mean, obviously overbought by any stretch of imagination, but, you know, on the pullback, I would be a buyer. The earnings are in 23 days. Keith, any thoughts on LA Lilly, NBO?
Yeah, I mean, I think that it's just a very bullish trend near the highs of the trend channel, but looks very bullish here. I don't see a reason to for anybody to get aggressive on selling unless it's going to be approaching earnings and concerns over that fundamental input in about 3 weeks. So that's got some time still. For me, it just doesn't seem like there's anything that's stopping this train from going higher. But we'll see if somebody gets to a point where they just argue that the overbought condition with the high RSI that's been really a whole month of 70 plus RSI, maybe somebody at some point will say that's long enough and we need to consolidate. But that's not necessarily bearish. It's just more about consolidation into earnings at that point.
Good, thank you. Yeah, Bob had a question on CSX and UNP. Trader is not loading, so I might have to quit and restart. But any thoughts on railroads here? CSX, UNP? I know they're announcing earnings also shortly.
Yeah, I mean, I'm just looking at CSX with the moving averages here, pushed through the 200-day yesterday and sitting on the 100-day today. So that could be just setting up some technical triggers here for some people on the long side. Yeah, I mean, to me, it looks pretty good. It's a little harder to trade CSX in the options market just because the increments are in nickels, not in pennies. So the markets are a little bit wider. They're still not bad, but, you know, the August options are a dime wide. And you can't put in a penny bid, you know, a 101, a 102, a 103 bid on an option. It's either $1 or $1.05. So just something to be aware of as you're going through entries on trades that you can do penny entries on spread trades, but not on the outright might be a little less precise on the entry. Union Pacific, UNP, you know, same sort of setup in terms of the liquidity. Little bit wider markets than CSX, which can be a little bit problematic, but it's very simple on a technical. They both look good, but with earnings in about a week in UNP and 2.5 weeks in CSX, I'd probably be more inclined to look at CSX just because they get a little more time to play with it and the markets are a little bit tighter in the options.
Thank you. Thank you. All right. Any other questions, Bob? Thank you, Bob. Let's see. What are other positions? So we talked about AMAT. Ford. What happened to silver? Did I close my silver position? Let's see. Let me pause the screen. Don't have any more silver. I think I did close. Oh no, I do have silver. I do have silver. It's weird. Where's the silver? Do have silver position. Let's try it again. The trading circle. Trade log. Position. Okay, so I do have silver position. Silver and FXI. So let's go over silver. So silver is consolidating, right? I still think it's a pattern of higher highs and higher lows. Some strong uptrend. General Electric, we talked about closing the trade prior to the earnings announcement next week. It's consolidated near 50-day moving average. No new information, no new signal. FXI, I have to think about it. I think now is the kind of a elections, and assuming that probability of red wave continues to stay higher, probably need to think about maybe be more aggressive as China, and that trade could unwind. So, I mean, we do have a clear stop loss. Maybe if it drops below this 26 level, then maybe that's the sign to get out. But that would be my thought process on China. Any thoughts on China? Keith?
Yeah, for me, I think it's the sort of false breakout from last week that seems to have failed right back into the range. Bullish wise, you can buy with the stop around 26. The low from June 27th was 25.87. So if you're bullish, I just use that as my, for me, that's how I would use my stop point is if we get below that June 27th low, then maybe it indicates that there's not a bull trend getting ready to form here. And then probably trim near the highs from Friday and then let some position ride if looking for a new trend here. So kind of trading around a portion of the position within the range between the June 27th low and the July 12th high, right?
Yeah, no, it makes sense. Any questions so far? That's a General Electric. Google. So I'm going to Google. Is another position I have going into the earnings September position, so I do have time. I do want to have exposure at least to one of the Magnificent Seven stocks, and Google, Microsoft continue to lead. So it's in the money spread. Time is on my side, but earnings, there's obviously earnings risk in 7 days. So if you look at the estimated move analysis for Google, and as volatility is rising, expect to move $15, so it could be $170 stock, right? It could be $170 stock, maybe $175, probably better probability. So $10 to $15 to the upside, $10 to $15 to the downside, to the upside or to the downside. I do have 180, 185 spread. So 180, 185 spread right now. Any thoughts on Google?
Yeah, I think that, it's like you said, we're looking at a stock that's likely to move somewhere in the $13 range on earnings. Could be more, could be less if we get a big outlier, obviously. But I think that the bull trend is there. People, I think, will still like big tech at some point especially if the earnings continue to be strong. But that's the big question here, is whether to hold through earnings or let it go. I think I'd mentioned before, I like having more of a September, October, November kind of exposure going into an earnings announcement, simply to make sure that I've still got some premium left if it goes against me. Having something like let's say weekly next week where it expires in earnings, if you get it wrong, your position's gone. If you're bullish and then we get a pullback, you're likely to take a near 100% loss on the position. So you've got a little bit more time for the rest of the sentiment to recover if the earnings do come out a little bit less than expected. So, I think that overall, though, that this is a reasonably bullish part of the big guys. Apple seems to still be good. Meta does not. We'll see if that changes on earnings next week. But, so far we'll see how these things kind of start to play out, right?
Yep. So I'm going to close the Bank of America. Obviously, the trade is going against me. And was the yield inversion, steepening of the yield curve. I think Bank of America, especially between now and Friday, could continue to grind. Down 20 cents, but 16 cents. But at this point, Bank of America continues to break out, and the trade could continue going higher. There was a large position at 44, but I think it'll stay at 44. But it could get to 45. So at this point, I'd rather just take the loss, especially as the momentum continues to accelerate to the upside for the banks. So that's Bank of America. Let's see, LA Lily. Any other questions? Let's see. So we have maybe 10 minutes left. Sounds good. The GTX and so are working very well. Thank you, Bob. On a little big pharma companies, you should consider that all their drugs are pretty much. Thank you, Kevin, for your thoughts. Apple finally seems to be renewing market leadership. Yeah, Apple, strong move in Apple. Their sales in China accelerating, and looks like strong demand for Apple products continues, and they are in a strong uptrend. Yeah, Apple continues to grind higher, strong momentum to the upside. All right. Keith, do you want to present? Do you want to start?
Sure.
I mean, we have maybe 10 minutes left. Yeah. And I'll listen.
I'm happy to do that.
Sounds good.
There we are. Oh, let's screw up which one it is. What's this one? Yeah, there we go.
See the live all.
Yeah, so as I mentioned on the on XHB, I took a look at DR Horton, one of the big home builders that's been benefiting from this move, and certainly having a very rapid rise here. They've got earnings in 2 days pre-market. For me, this is not something I'm looking to trade. It's just going to be something to watch here between now and Thursday morning when this has earnings. If it's bearish earnings, I actually expect that to be more of a buying opportunity, because this move right now is not based upon what's been happening, but what people are expecting in the future. So that's something more for me to watch as a result of what earnings do. But with an overbought condition right now and some earnings coming up, we may get a little bit of a pullback that could just be a buying opportunity for home builders. At least that's my approach to it for now. But I don't want to do that with options or anything here, because options are more expensive because we're pricing in the earnings move. Once we get past the earnings move, that implied volatility can drop back under 30 down into the high 20s. Potentially, and create a better leverage situation for the options. Plus, give me a more clear technical setup without that earnings part of the equation still present. So you see, last earnings on April 18th, it spiked up and pulled all the way back down to unchanged, effectively, or down a little bit by the end of the day. Will be interesting to see if we repeat that sort of pattern here. The earnings have generally been pretty muted. But in case we get one of these big moves like January 23rd, where we just had that big down 9% move, we'll see how that plays out. KBH, another home builder here that's been mentioned, and they've got a little bit more time till their earnings, September 18th. So can play more off of just the momentum and the sentiment. But remember that it will trade a bit off of DR Horton's earnings as well. So when DR Horton announces their earnings, people will react to the whole sector. So it's an input that will matter for KB, even if it's not the driving factor of its normal move. So that's just but that's an issue for Thursday or for weekly options if you're in these July. If you're into August options or later, the October, which includes the earnings, then this week's technical move or earnings from DHI driven move is going to be a little less impactful. I think we took a look at Apple briefly. I still think that Apple and Microsoft and Nvidia are going to need to maintain a bullish backdrop in order for the tech market to continue firm. But we're not seeing that in all of them right now. I think Facebook overall looks a little bit scary here, Meta getting back here down to this 50 and 100-day moving average. Maybe there's some support here in the range from this May trade in the 470s. If that support doesn't hold, we've got some potential for some real downside there. As you know, the semiconductors just haven't been particularly strong as people are rotating. So it's not that the semiconductors are bearish, it's just a rotation-based trade. So the problem that they've got is if that rotation hits some technical trigger points, then we get liquidation instead of just rotation. So that's going to be something to watch closely to see if rotation, like the breakdown in July 11th, just turns into a buying opportunity for a day or two, or if this is really setting up more of a pushback down into, it's not that low, but it's not that much further, especially relative to the move we've gotten, but back into the 257 range here, the lows here, 255 and change. It's still 6%. So that's not something I just want to completely dismiss as being a nothing move. 6% in a short time period can certainly hurt if I'm leveraged long or short a put spread or something like that. I'm a little concerned about the semiconductors here and the potential for a technical element creating a liquidation trigger because of this market rotation. But overall, it's not a panic sell yet, just a potential for one coming. I had mentioned yesterday Micron, that's not looking great today. So if this does not recover today, I'm not particularly excited about Micron anymore, and I'll probably pitch out my trade idea on the bull side where I was looking at the September 140 calls as a diagonal, selling the August 2nd 145s. It just if this starts to fall through here to the downside, especially if it gets below the July 1st low of 127.27, which is only $1 away, then this doesn't look great right now. The September 20th 140 calls still have some pretty good value here at $5.60. Those August 2nd calls are 90 cents. So it's a $4.50 or $4.70 spread. It's not a huge loss on the spread in spite of this move, which was part of the reason I like that, that kind of spread type position. But it doesn't seem to be illustrating right now any real potential for upside move on the backs of, part of what I was looking at before was the fact that AMD, which is now pulling back, and Intel and some of these other chip makers were starting to show some signs of momentum here really last week, and then even pressing up again on Friday. And that's just not getting the follow through I like right now. So that may not be a good trade to hold after all anymore. What else did we have here? One other one that I know we've been kind of watching, Disney. It looks a little bit hairy here. It's getting close to that low. If it gets below the low, I think it can get stopped out or from anybody else that's got longs. But I think that this could have some downside here. On the other hand, of course, if we start to show some real momentum to the upside, then the resistance level here in the 102, 103 range starts to kick in. So for me, this is still not a great. I'm more intrigued if this starts to liquidate just from a leverage move in the short term. And Starbucks is scaring me a little bit for the long, the bull, the bear looks like it's getting close to taking control. This could be a false breakdown today because we had a new low that we've bounced back. You can see that this 10-day moving average is providing some resistance here. We really need to get back above the highs from Friday in order to start giving me some confidence that there's some real support to the market and there's some real buyers. But if that happens, I'm sort of expecting more of a move like this where you kind of chop higher, not a straight line up like we saw in, the home builders and small caps and things like that. Any other stocks in particular that people are looking at right now, or happy to pull up a couple more? You can pull up United Airlines that we talked about yesterday as well. United touched the 200-day moving average and bounced. Going into earnings, it's already priced in a bearish scenario thanks to what Delta did. Earnings on Thursday after the market. We'll see if this repeats what Delta actually did on earnings. But, I think a lot of that potential for bearishness has already been priced in. So for me on this one, I lean bullish just because we've already gotten a pretty good move down. You see where we were on July 10th, trading around $47.15. So yesterday on the close, down to around 44.30, we were down, call it 7% off of Delta earnings. Now down just a little bit, actually. I mean, a pretty good bounce back today. So it could be an interesting trade, though, if we stay in this range going into earnings. There could be a potential for a bullish bias on earnings. Just understanding that if it comes in bearish, I wouldn't be surprised to see prices down towards 42. The normal move on earnings is around 6%, which is, call it $2.50, almost $3. So if we're coming from here, that 42.5 range could come in pivotally. There's some big open interest here on the 45 puts, but not much below. So I don't see an obvious magnet or trigger point here other than these 45 puts. So that could be important to understand there. On the call side, there's a lot more interest here. The 46 calls, the 47 calls, the 50 calls, the 55 calls. There's just been a lot more interest on the call options than in the put side of United Airlines. So what else do people have for today? Anything of major interest that they're looking at here? You can check and see what we've got as a reminder for today after the close on earnings. There's nothing too crazy for this afternoon that is particularly interesting. I mentioned ASML being probably hard for most to trade for the $1,000 price, but we can look at it anyway. ASML just kind of consolidating going into earnings for those with a larger account balance, because these are $3,000, $4,000, $5,000 options here just for the ones that expire this week. This could be another one of those trades to look at, an iron condor. The average move is around 5%. So $50. It puts $1,000 right into the crosshairs here. So the previous low, $1,000, $1,002. The upside 1120, which matches pretty well here with the high from July 11th, 1,110 in that case. So the one standard deviation move on earnings is pretty. And when you look at the options, oftentimes those big round numbers like 1,000 build up some open interest. In this case, because it's so high dollar, 876 options is a pretty large size position in ASML. 1,100, 900 calls. It still has a pretty big representation of cash required for those trades. So that's why, 900 can actually be pretty big. If these were like Bank of America, 20-cent options, you'd have the same amount of cash for 90,000 of these, times 100. So in any case, I'd be looking probably at this one as another potential for an iron condor. If I was going to do anything, maybe looking at a 1,950 put spread for about $7 versus a 11 20 1170 call spread for about $9. So, there's smallish trade here, but 9 plus 7, $16 of premium to collect on that iron condor that's got $50 wide spread. It's not a bad R&R. Risking 34 to make 16 if you route it to max value or max loss, for something that would be then just basically betting that the stock does not break out of the range on earnings. So that's one interesting one to me right now for earnings that are coming up tomorrow morning. We can also go over to Johnson & Johnson tomorrow morning. We've had this big support here. Really 145 is a big support level, but Johnson & Johnson is a very slow moving stock in general. Earnings moves tend to be 1.5%, 2%. It's not a huge mover in any case. Right now, pricing in that normal expected move. If one wants to do something here, I don't see a real huge benefit of using July options for a leveraged move. There is some good open interest here on the 155s and some interest on it today. Looks like maybe some people putting on some bullish trades here prior to earnings. But if we're only going to get 1.5%, it's, we're looking at a move to 153 on the bull side, barring a multiple standard deviation move here. So I'm not a huge fan of Johnson & Johnson in terms of the earnings play, but, just to take a look at it, the 155 strike could become a magnet if we get a bullish report here. All right. Let's see, what else do we have here? I like looking at TLT for the bond stuff, just to reiterate, we're chopping here near the lows in the yields for TLT. There's nothing crazy here on 20-year bonds, but if we get to a new high, new low in yields above the June 14th high, that could create some more rotation in the market. Otherwise, it just seems like we're really chopping in this range and tightening up the range slowly here in the bond yield overall. All right. As we continue on, I mentioned United Airlines for earnings coming up. That could be interesting. Somebody mentioned CLF being down on an acquisition. They've got earnings on July 22nd, so we'll see if that has a big impact. The one that's coming before it that could impact CLF is Alcoa. Alcoa's earnings are on July 17th, Wednesday after the close. So tomorrow after the close, you got Alcoa earnings trading near the lows of the recent range. And when I look at the earnings on this, the average actual move is significantly less than the average implied. So the average implied is over 6%, but realized it tends to move about half of that. The problem is it basically either moves all of that or none of that. So that could create a scenario where, after a couple of non-movers, we end up getting that 6% move. 6% in this case would be about $2. $2 to the upside puts us right back here to 40. $2 to the downside puts us right down here to 35.5, just below the recent lows, but kind of in the range from April. And the options market right now is pricing in some interest here around 40. It feels like that 40 line would be a pretty big magnet if we were to get a bullish report. It's not a huge magnet here with 5,000 open interest, but with 5,000 on the call side, 4,000 on the put side, that'd be the most likely target price, it seems, going into earnings with anything bullish. So, couldn't look at some structures here that target 40 here as we get close to the earnings tomorrow after the close. Other than that, I think that's kind of our setup right now for the market. Overall, small caps still firm. As you can see, if I go to the 5-minute chart here, you can see that small caps, rallied and then consolidated near the highest here, haven't really had a pullback. And tech tried to pull back, now seeming to bounce back a little bit. But if we start to make new lows here below the lows of the day, which are, about 50, 60 cents lower than here, we could start to see more of that price action like we saw, back last week, where he was just kind of extended their losses while small caps were extending their gains. I don't think it will be near the magnitude of what we saw last week, but we could certainly see a similar rotation after we had a couple of days of consolidation in tech. There might just be a little bit more profit taking, pulling off positions in tech. But yeah, seriously, looking at the low today, and if we get below it, I start to get a little bit nervous about long positions in tech for the short term, a couple of days, and then maybe this rotation goes right back to buying everything mode. All right. Well, if there are no other questions, I think we'll call it here for the morning, and I hope everybody has a great trading day. We'll be back here at the close. I'll be with you guys to talk through some of what we see here through the day, see if this tech break gets follow through, or if this is just a little blip in the radar and we see buyers come back into this market, and what will happen with small caps. Will we continue to extend this overbought condition, or finally start to see some sort of profit taking point where we consolidate? Time will tell. Thanks again, folks, and we will see you this afternoon.
Yes.